under this sun-scorched patch of Iraq is enough oil to help change the country's future and possibly world oil prices. This is the West Qurna 2 oil field in southern Iraq. It's one of the world's largest undeveloped oil reserves. Russian company Lukoil has just begun drilling the first well to get to it. It's been a long battle for Lukoil. In 1997, the company signed a contract with Saddam Hussein to develop the field. He later cancelled the deal. But after the war, Lukoil won the auction for the much-prized West Qurna 2 contract. Sergei Nikiforov, vice president of Lukoil Overseas, tells me this is the company's most important oil field outside of Russia. It's a long-term project. Once production starts, Lukoil will be paid just $1.15 for every barrel. But its goal by 2017 is to be producing 1.8 million barrels a day, and it plans to do that for at least 13 years. Some analysts say the immediate returns are so low, they believe the company is using the project to get a foothold in Iraq with an eye to future projects here. Lukoil executives say they will compete in the next round of Iraqi oil contract auctions scheduled for May. That might be why the country's oil minister was honoured at the ceremony marking the start of drilling operations. West Qurna 2 is also very important to the Iraqi government. It's expected to play a big part in its plans to dramatically increase the country's oil production. From the current 3 million barrels a day, Iraq had hoped to be extracting 12 million a day in just 5 years. The industry has long scoffed at such an optimistic goal. Now the Iraqi government says it's reconsidering. Has Iraq abandoned the 12 million barrels per day target? And if so, what do you now believe is a realistic target for the future?
Now we study the new target for all our oil fields. And also we have another company to study the best level of production in the few years, inshallah.
Whatever is decided, it's hoped new Iraqi oil from its enormous reserves will boost global supply and ease prices. But there are two key reasons why any change could be modest. Supply increases will be quickly consumed by growing demand from resource-hungry emerging markets. And the legacy of war still hangs over these oil fields. Body armour is still mandatory almost everywhere on this field, even though this is a relatively safe region compared to other parts of Iraq, but not compared to other oil-producing countries. And analysts fear that if the markets have ongoing concerns about insecurity, about political instability, this will not be regarded as a stable long-term supply, and it could impact the price of the oil produced here. Lukoil admits operating in Iraq is enormously challenging. Its partnership in West Qurna 2 with Norway's Statoil has not survived the experience. Statoil has asked the Russian company to buy out its almost 19% share of the project. Neither company will explain why. International oil companies and the government are still some way from achieving their ambitions to exploit Iraq's untapped economic potential. Phil Black, CNN, near Basra, Iraq.